everybody. Thank you, ObserveNow, for inviting us all here, and particularly inviting me, so I extend my thank you. So we're talking about Fintech Unplugged. Fintech's become very important, and why? So some of us who've been in the financial services industry for many years know that finance and technology have become integrated like they were never before. They're very, very closely intertwined. And that is the reason fintechs are so important. Obviously, because commercially they've become very important. There are various numbers that go around in terms of the size of the fintech industry. The numbers I've seen vary around 300 billion in India to 600 or whatever the numbers are. But suffice it to say that it's a very, very large industry. How do we all know fintech? I think the reason why we know fintech much more than any other reason is that of the payment landscape that has changed in this country. The UPI, the payment fintechs, the, the banking on the phone, the mobile banking, all of that has been made possible through the changes in the fintech world, particularly in the payment fintech world. That's why we, it's been commonly adopted, universally adopted, and therefore fintechs become really the buzzword. But beyond the, as all of you know, beyond the world of payment, technology has merged into finance in many ways. There is the reg tech, which is regulatory technology. There's wealth tech, there's insurance tech, and there's asset management tech. There are many techs. So clearly, fintech is absolutely central to the existence of the world of finance today because technology dominates it. And what we are here to discuss today is, as the MC said, Fintech Unplugged. But we're going to talk about fintech in lending, fintech in payments, and of course, related ramifications of fintech across the markets, across the finance sector, and across, the communities. But given that this is, we've been allotted, I think, about an hour, and we have very distinguished panelists around here, all of them very seasoned industry professionals in their own rights and in their respective domains. So it is my real pleasure to be part of this panel, very esteemed panel. And, it's my privilege as well to be moderating this session. Now, given the limitation of time, what I was planning to do and what we were all planning to do here is to focus on a few key areas. That includes digital lending, digital payments, data security, customer PII, and any such ramifications that have perhaps a bearing on all of us or the community at large. While the area of inclusivity remains central to all of this, democratization of technology and finance that at least the payment landscape has brought in. So therefore, I'm going to request my panelists to include inclusion to the extent that they can. So my questions will be focused on primarily these three areas, and the experts will respond basis their area of expertise. Without much ado, let me start off. And my first question I would like to, raise to Mr. Manish Mathur. Manish, Manish, you run a bank. You're the country officer for a bank. And you're aware, and all of us are aware, that banking has gone through several levels of progression, which has propelled the industry to where it is, from core banking, from automation, to focus on AI. So I'd like you to help us understand a little bit in terms of, so 3 points. Point number one, what in your view are the two key transformations that have taken place in the banking sector from the technology standpoint? And second, in the lending space, what is it that you see emerging? And the third question I have is, what do you think needs to happen to make digital lending as impactful as digital payments is?
Yeah. Sure, thanks, thanks Nina. So I think, obviously I think digital technology or, the impact of, or the incorporation of digital facilitation has totally transformed banking, I must say. And obviously payments has been the primary beneficiary. So, the payment sector has completely transformed. And I think because of that, I think a critical sort of determinant of the bank's success, which used to be the extent of presence that they would have in a particular geography. I think that has totally gone away. So, and I think the second thing is probably, the use of cash, or, the sort of impact of, payments and cash management to the bottom line of banks and to companies. I think that has really totally changed, as digital technology has infiltrated into the banking sector. And I think really I feel that banking, because of these changes, I think banks have really become a sort of part of the technology, infrastructure. It is no longer just a financing, sector that we are looking at. I mean, I think banks are like quasi-technology companies, I would say. So I think that is the main changes I see. Obviously there have been a multitude of changes, but I think broadly, I think that is where, the banking sector has evolved because of these changes that technology has brought about. I think on the ULI side, I think clearly on the lending side, what's really happening is that historically banks would rely on, static information, typically annual reports of, companies, of status of financing for individuals, for MSMEs, and all of that. I think that has changed quite dramatically because of the, because as technology has evolved, there is a much bigger source of data that is accessible to banks. And therefore, banks are able to not only look at static financial data of their borrowers, but also look at some more near real-time, information that is available through multiple other sources, which sort of corroborate or, conflict with what is available on the static financial side that is available. So I think that has really democratized, or that has sort of brought in a lot of new customers into the banking fold, which were historically unbanked. And I think the last presentation and the fireside chat that we had, that obviously deliberated a lot on the personal side. But I think even on the MSME side, I see there's a lot of change that has happened, and a lot of banks are actually getting comfortable, especially the foreign banks or the private sector banks. They've gotten much more comfortable with MSME lending than they used to be in the past. Because there is a lot of granular information available, which is more current, and which gives a much better understanding of how the company's cash flows and businesses are actually evolving as we go along. So I think that has really made an impact. Obviously, with AI coming in, I think that has obviously led to a lot more predictive intelligence also coming through to the banks, where banks are actually taking a call based on all the available information that has been there to sort of make an assessment as to how likely is the customer to honor their obligations on the loans that the bank extends to them. So I think those are some of the changes that I see have happened on the lending side specifically. In terms of evolution, as you know, ULI has come about, and I think that's primarily focused from the government perspective. The focus has primarily been on the unbanked segment of the industry, and I think that is something which is obviously evolving. I think microfinance institutions are also playing a role there, but having a common repository of this information is obviously helping banks in taking a decision. But I think as we go forward, I think on the lending side, I feel that the kind of sources of information that you will have, I think they would probably come together, in one, because I think ULI is still restricted primarily to, information which is related to government sources. But I think as we go along, I think there'll be multitude of players, who would be able to plug in their data into the repository that the centralized agency will be maintaining. For example, you may know that there is a there's a national switch that RBI is proposing for all the credit cards as well. So instead of going through the service provider, it will go through the switch. And that will obviously enable a lot of that data to also flow in centrally. And that could be used in the credit evaluation process. So I think that is, one of the changes that I think will happen. I think the other thing, I feel that there will be a refinement of the models as well, because I think although we have taken to technology in a big way, and that's obviously helping in the credit decisioning, but I still think there is a seasoning which has not yet happened of the portfolio that has been built up based on these models. And I think as we go along, I think there will be more refinement of that as well, and that will probably, make it more predictable and I think more reliable as we go along. The third thing, if I may add, is just that I think on the cross-border side, I think so far the data that we have been using is primarily localized, and that is the way, we have been lending to companies. But I think especially for, banks which operate or even entities which operate across borders, there will be access to information which will be available in the overseas markets as well. And that can also add value to the credit evaluation of the banks or the finance companies or NBFCs. And that will also sort of add value as we go along. So I think those are few things that I thought will sort of evolve as we go along. Yeah.
Okay, no, very, very helpful. I think those are sort of key ideas. And I think you covered both the current, the prospective. So very helpful. Thank you. And so now, I think I'd like to switch over to Aditya. Aditya is the Chief Data Officer for SBM Bank. And so I thought it'll be very appropriate for us to understand from him, given the digital movement that has come about and the ecosystem that's been created, there is a vast footprint of customer data, digital footprint of all of us, both in the financial and the non-financial space. What, if any, are the specific concerns, Aditya, you have around data security and privacy? And the second point is how, in your view, there are one or two steps, if you could tell us, would help mitigate, protect.
Sure, Dina.
And the third point I have is what architectural or regulatory innovations are needed, in your view, to make digital-first banking safer?
Sure, Nina. I think this is a great question. So a couple of things from my side. So I think we all agree that we live in a customer-centric world, right? So we have to think customer first and then, design, build whatever, backwards. That's what basically we say. So now with this DPDP Act, this is now in Act. So there are a lot of things which the DPDP Act expects I would say, regulated entities, not only banks, but I would say the regulated entities to follow, right from how do you acquire the customer, right from there. How do you model the customer? Basically, when I say model, I'm talking about the logical data model, where basically you model the way the customer data will be, stored, processed, and then disseminated all across. So all this lineage, the customer lineage, I would say, how exactly you are maintaining it, and how exactly this is linked to the customer consent framework. Because it is very, very important to take the customer's consent, that whether I want to use the customer's data for my downstream processing. It could be anything, like it could be descriptive, or it could be any analytical kind of a framework, so on and so forth. So the key is that the customer data we can't treat just like that, whatever we used to treat earlier with the act in place. Now, in terms of the how-to part of it, so of course there are a lot of now I would say regulator accredited customer data models, which basically I think the banks or the regulated entities can look at, and they can accordingly not only logical, they can also think of how to exactly physicalize the models and then pass the data into the various kind of a CLTV model. I'm not going into the details of it, but their banks have a lot of these models they use for, of course, upselling, cross-selling, and offering other various kind of services, right? So what to serve, what to offer, what not to offer, and why to offer, all these things needs to be absolutely captured. So these are the few things from my side, but of course, one more thing I just want to touch upon, that RBI also expects the bank to submit all the regulatory reports via their SIMS platform. So when SIMS, it's called Centralized Information Management System. So there are a lot of this customer consent related returns, I would say, which the regulator expects the regulated entities to submit via the SIMS platform. So very soon it will be basically mandated to all the regulatory entities, especially for the banks to start with, and then the NBFCs and all. So these are some of the changes which are happening, and I think since we are in the regulated world, we have to be comply, to this.
You think enforcement would be easy, setting a framework and then enforcement?
See, to answer your question, see, every bank, I would say every entity, the data and information maturity varies from banks to bank. Like for example, Bank A, their level of data and information maturity varies from various fintech driven bank or whatever. The banks which are having huge legacy systems where customer data is basically kind of, stored here and there, and they don't have like master data management or metadata management kind of thing. So there, I think there will be challenges, because it will be a huge investment, to be honest. Because tying up the, simply saying that, I have one customer view, it's not all that easy, because there are a lot of legacy systems where customer data is lying here and there, and then unifying it, first of all identifying it, then unifying it, and then enforcing all the checks and controls, and then from a regulatory reporting perspective, I'm saying. So this will be a huge investment, to be honest. It's not that it's a 1 day or 2 day kind of a thing and then I'm done. It's a program which needs focus from the board and then accordingly implemented.
Yeah, I think that's a good point to make about investment with respect to data security, yes.
And to be honest, the organizations are doing it. Now they are budgeting it. Of course, that's the reason you're seeing this, the CDO kind of a role are important for the regulatory entities.
Right.
So, yeah.
Okay. Excellent. Thank you. Thank you for your comments. Sure. Let me now turn to Gaurav. Gaurav represents BHIM, which is a UPI payment company and payment system. Now, I patronize BHIM, so I'm keen to ask you some questions. Do you believe that the payment technology, and there are a large number of payment firms, the payment technology has matured, or are we still evolving? That's my first question. My second question is, in the payment domain, we've seen a fair amount of sophistication, as I see from the outside. What are the key issues that you face in terms, or the industry faces in terms of data security and information security?
Thanks for asking these questions. They are really pertaining. Coming back to the first question, what we have just mentioned is like, in terms of technology perspective, especially in the arena of payment, have we matured or it is getting matured? So I would say like, if I talk about NPCI part, so it's known for innovation. And I would say like, in terms of payment technology, I will go for the two bullets part. One is basically, say as part of BHIM, if I would say, right, so our core tenets are, have the inclusivity of everyone, given whatever gender, demography, the kind of age group, or the languages or whatsoever what we have it, right? So that inclusivity is must. See, for the inclusivity part, what I would like to mention is like, when we talk about payment technology, we mostly say about the digital payments, what we are seeing, right? At the same time, there are payments like USSD based, or like the feature phone, where we can go to the remote corner of India, and we can enable them as well as a tier 3, tier 4, tier 5 of the cities of India. So I think there is a huge push is required, or innovation is required to basically come up so that we can onboard them also onto our payment platform. Second is basically payment is being driven by data and technology. So, I mean, if I look from the perspective of technology, AI, blockchain, or basically I would say the decentralized technologies are coming in, right? So the intent here is we might have seen leverage of AI in terms of hyper personalization, in terms of fraud detection, in terms of making things simpler using customer support and all. But still we have not seen how the payment sector will fare when it comes to agentic AI and the AGI that is coming in, right? So that's something which is very pertaining, and as a payment technology, we have to keep on evolving. At the same time, as mentioned before, like, I mean, the way our data rules are getting matured using DPDP and others. So, I mean, how to evolve and how to abide by, because payment is a sector which is mostly driven by trust. So trust basically comes, the guardian of trust are mostly the regulators, right? So regulators are coming up with their own set of, regulations, be it like in terms of DPDP or some other regulations, right? The existing PIS and other one. So, I mean, how to cope up with that, and how to bring innovation so that regulatory also is state of the art, can go along with the payment startup system what we are having, right? So keeping these two factors in mind, I strongly believe that a lot has to come from the payment technology sector. So yeah, I mean, so that's what, you know, I would say, like, I mean, payment technology as a sector, it still needs to be, a lot has to be done over here.
Great, thank you. I'd just like to now move on to Himanshu. Himanshu represents Fino Payments Bank, so he's a payment expert. And therefore, again, my question to you is twofold. Do you see that we have an optimal number of payment companies? Do we need to grow them, or will they logically evolve given the size of our markets, or do you think we've reached an optimal number? That's one. And also, if you could help me and the audience understand whether interoperability is an area that is being focused on, and any benefits that we will derive out of those.
Thank you, ma'am. Good afternoon. So a small disclaimer to start with. Whatever I'm going to say would be my individual opinion and may or may not be of my organization. So wanted to take 2-3 minutes and few seconds to start with. As 2015, Mr. Raghuram Rajan introduced differentiated banking in India with 11 odd payments bank and 10 SFBs. The idea was to go till last mile as also part of the financial inclusion, and one of the important factor which was there for the to give service to all the bank account holders through payments bank. The idea was also pushed by few of the companies, would not name them, but basis the experience in Kenya, South Africa, where the few players are managing, non-banking players are managing rather 72% of the financial transaction, and that pushed the idea of payments bank in India. Unfortunately, there were few scams in India. By virtue of that, the entire model got changed, and 4 to 5 of them surrendered the license immediately, and a couple of them in the as we moved. But so payments bank, fintech, because we started as an institution as a fintech, and that transformed into payments bank, and now we are aspiring to become SFB. and then, of course, as a universal bank. So we have seen all the journey. The kind of banking what we are into right now, we can access our any bank account details with our applications which are there in our mobile. The kind of enormous data which is already there through that, this is small instrument at what time we are waking up in the morning and what time we are sleeping, where all we are roaming. So one side we are having an enormous data which is there. Transactional data on the other hand, for the first-time borrowers or the kind of lot of data which is already there, which is getting access through many of the mobile applications what you already have on your mobile. And now with the help of interoperability, where you can have access of any bank account details through your mobile. So the kind of power now this tool which is giving to these fintech players, where they know you in and out, and then there is no need of any credit CIBIL score for you or any scores which is being rated to you, because they know everything is how many checks got bounced and where all you defaulted as well. So nothing is being hidden. The chai wala, the vada pav wala, all the informations through UPI is there. So by virtue of UPI, we are the global leader now, and now the digital currency which is also being experimented by RBI, though it's at the very nascent stage. But to answer your question on if there is a scope of more players, yes, because of the size and the scale what they can operate, the fintech players in the market, and the kind of banks who are offering the BaaS bank as a service, or the platform, or the open banking. That is the future of India, where the banking is like any other transaction for you, and not in our age when we started the banking career with Bank of Baroda only. That time the banking was very, very different, and the way we are banking is absolutely different, and in future it's going to be a very, very different again.
Thank you. So thank you for answering that question on interoperability. That was very, very helpful. Let me now go to Aniket. Aniket, yes. So Aniket, you know, you're part of Kotak Bank, and you mentioned that your focus is on asset management technology and investment technology. So as I mentioned earlier, you know, fintech can be, banks can act as fintech. There can be companies who are fintech. And so in my view, any company, any entity, bank or otherwise, NBFC or otherwise, that collaborates with a technology company, or that interfaces with technology with finance, or that sort of embeds technology in finance, is a fintech. Now in the traditional sense, we've known fintechs as payment and lending and so on. But, you know, so interesting that we have Aniket with us, and his focus is on investment banking technology and asset management technology. And so I'd like to understand from you, particularly from the aspect of asset management, as to what you believe have been some of the key developments in the technology domain, because asset managers are regulated by SEBI. And SEBI itself is focused on a lot of technology enhancements. So could you help us understand briefly what are the 2 or 3 key technologies or enhancements in the asset management world that have taken place, and or those that are in the pipeline? So anything around your work that you can talk about, or the industry?
Yeah. Thanks, Nina. Same disclaimer what my friend suggested. All these views are in my personal capacity. It may have impact on my organization, but those are not organization views. So coming to your question, if we list down the transformation or initiatives which we make, yeah, the list will go on for the things which we try to cover. And as you rightly mentioned, fintech is now every financial institution, because all are largely driven by technologies. And some of the transformation which we believe, or which we have implemented, rather it is going on in asset management side, is predominantly towards assisting or enhancing employees' capability with new ingredients, which we call it generative AI, right from co-pilot or getting the employee empowered with robotic processes, or making their day-to-day job activities to more efficient way. Those are some of the transformation which we see happening in asset management side. One of the key drivers which is happening on asset management is more towards the research of financial data, because now we have a large ocean of financial data which is available in India, and which are humanly impossible to track or deep dive into. So the technology is helping all these financial researchers to get great insight on this ocean of data and providing those key information for making their proper decision about investment. So these are some of the things which we are taking care of.
I'd like to ask you another question. So from the regulatory standpoint, SEBI's standpoint, what are the key priorities that they are requiring the asset managers or fund managers to execute?
Okay, SEBI.
Just one or two.
Correct. SEBI has been very, I would say, dynamic in nature now from the earlier avatar, and they are also tracking all these initiatives. They are ensuring that they support all this initiative in a secured manner. So some of the regulations which are coming towards AI policies which are coming up, then hyper-scalar data center policies which are coming up from the SEBI side. So these are some of the initiatives which SEBI is trying to regulate to ensure that the investor data is secured and protected.
Thank you, thank you. Shiva, let me come to you. I understand a significant part of your business is gold loans. Tell us a little bit in terms of whether there are many gold loan companies, and you know yours is a significant one. Tell us a little bit in terms of whether your gold loan journey is fully digital, or you know, and also industry, if you can comment on where is it in this path to evolution. And I know that this industry, gold lending, is secured. So that kind of risks don't exist. But what you want to bring in is efficiency. But also my second question is that gold lending is primarily in the hinterland. Some rural areas, some tier 2, 3 cities, not in urban areas, you know, tier 1 cities. What is the, you know, path you see for digital lending to be universalized?
Let me do the hat trick. All my views are subjected to my opinion and not for the company standards. Coming to this, since gold loan is an interesting business in the EMI products compared to other products, I would want to throw some puzzle back to you. If data is collateral, then what can be your behavior in an analogical manner? Whoever answers will get the Bisleri water bottle from your... So I would complete that. If data is collateral, your behavior is nothing but bureau. Why I'm saying this example? Because for all these secured products or lending products, you will have your CIBILs and all the other stuff. Whereas for gold, it's more on the security driven, and you would give it to all UPI wallas, right? For gold loan business, be with the one who is chai wala with UPI is equal to suit wala with CIBIL, correct? On the gold loan business. What is the pinpoints which we observed for the gold loan business? While we can make things easy, but still there's the physical gold involved, you can't make it fully digital. What we can do is the doorstep gold loan, which we are also doing as a company, and that also emerges from the thought, you know, if I can buy gold ornaments from Amazon, why can't we take the gold loans from the online portals? And that's where things have emerged, and we all have been doing there. Now, the other challenge which we observed was generally, you see, most of the gold loan business happens at tier 2 and tier 3 cities, where the voice and vernacular predominantly, in a way, if I have to tell with again another analogy, earlier our feet is going to the branches, now our fingers are going into the mobiles. Earlier, we are using pens and papers. Now we are using our tongue and voice, correct? To fill the forms or to say anything. That's how the underserved products, underserved segments or underserved cities is being handled. I think it is something like, it's not something, it's teaching to the banking, it is already there. If you are able to understand it better and solve the customer problems in such a manner which is very feasible and easy to access credit for them, that would solve it. And I would also end with something. While we are doing some kind of ML in our mortgage business and gold loan business, what I wanted to bring to people is, sir, you know driving, car driving? Yes. So he knows something. Sir, you know pilot driving? You know, can you drive flight? No. So he knows, he doesn't know something. ML or AI in these days is something I don't know that even I don't know that. That is what ML. And that's the depth of it, where it is going, and where, since this is Fintech Unplugged session, right? What I understand from my years of experience is, any transformational change that happens, which is very close to money or health, people will adapt very quickly. Just imagine demonetization and COVID. In 5 years, smartphone sales have. That's how it is, and that's how I want to end. And it is more connected to the gold as well.
Very well said. Thank you. Thank you so much. Let me go to Yogesh Joshi. He manages sales for iExceed. I understand it's a digital banking platform, provides support for various consumer channels, banking channels. Now, I had a question for you with respect to consumer behavior. Do you think technology enhancements drive consumer behavior, or is it vice versa? What impacts, what follows what? That's one. And the second question I have is, what is the return on investment measure of digital banking? Are we able to measure it in any which way, concretely?
Thanks, Nina, and very good afternoon, people. Is it working? Hello? Okay, yeah. So on contrary to what Himanshu and maybe Aniket said, whatever I'm going to speak, I think that also resonates my company's statements on lighter side. But then when I was looking at the panel before I start answering your question, Nina, when I looked at the panel, actually, I thought as an iExceed company, we are fortunate because we have worked with private banks, we have worked with payment banks, we have worked with foreign banks working in India, we have done gold loans in India for some of the banks, we have also worked with small finance banks. So I think pretty much you started with fintech evolution, democratization of the services. So what we do, before I answer the customer behavior aspect, encompasses, or it has it is got an umbrella for all these services together. It holds everything together and provides it to the end consumer. That's point number one. Secondly, we are Homo sapiens, right? Human behavior pretty much majoritarily will remain the same from APAC to Latin America to Americas, right? And that's what we have seen. When it comes to consumer behavior, whether technology comes first or consumer behavior impacts it, it's a chicken and egg situation. And many times there are also other factors such as regulatory changes, or in our own country like payment system enhancements, technological enhancements, or entry of other mobile commerce, e-commerce apps. It has impacted customer behavior and vice versa, right? So it's evolving. Now, if you really look at all these continents and consumer behavior, how it has evolved, if you really look at fundamentals, and if you ask, okay, what do you want in the app, or what do you want in your internet banking, etc., the first question or first answer would be, it should work, or it should deliver to the promise what is as made, right? And it's pretty much, it's naive to even think about it, but that's what it is. And many apps also don't deliver on that. So that's number one. The second is, it should be always on. Again, very much basic now. But maybe 5 years, 6 years before, even NEFT, it had limitation of clearing cycles. And people who may know that it was only open for banking hours. It was not working on Sunday. So I was okay to wait on Sunday to get that credit on Monday morning. But not now. I want to do it maybe 12 in the midnight, 2 a.m. It should work. Otherwise, I will go and post a bad review. Right? So that's always on mode. Like I want to order something from Zomato at midnight. Whether it is good or not is a different thing. But I want it. And payments should deliver on it. So that's always on mode. The second thing is, again, I'm not ready to wait. That's the behavioral part again. Speed. I want it now only. Now, example for that is, let's say if I'm trying to do some investments or on my broker app. Right now there is a facility where I can do GPay or some other app. I can transfer money from my banking app to the broker app, and it is very instantaneous. I can buy stock within 2 minutes. Right? So that's the speed as an expectation. Again, similarly, coming to banking side, onboarding of my own profile to banks or applying for loans, since we are talking about lending. So everything should be instantaneous. So that is again part of the behavioral change, and technology is pushing to that limit that, okay, I would deliver it and customers are, expecting more. Then next comes is personalization. So, okay, you're working, you're always on speed, but now I need personalized service. I don't need those damn bad, I would say, globalized coupons. Okay, nowadays I don't even go and see the rewards because it's all generic and they're practically useless, right? So that's, maybe somebody talked about hyper-personalization, use of AI in that, but that is also driving the behavior and vice versa, right? So again, it's not a chicken and egg situation. I think all these factors coming together, impacting each other. I think that was your first question. The second question was, I believe it's on ROI, whether we can measure it or how it's happening. So again, I would go back to the things that we do, right? So we are working with all these great players in the industry, and we are also working with digital banks. So traditional banks may have different metrics or different cost to income ratios, etc. But when it comes to digital banking, they have to measure it because they have to show to the investors that what are the parameters they are delivering on. And again, one of the basic things was adoption rate. Now, adoption can have 10 more sub-parameters, but how many downloads are there, how many users are there, how many active users are there, all those things will come into that umbrella. The second would be, again, cost to income ratio, because that's the whole purpose. Otherwise, you will go traditional mode and you will deliver it in that mode. But let's say if cost to income ratio for traditional banks is anywhere, let's say 50, 60, 70%, digital banks are striving, even successful bank like Nubank in Brazil, I think they are at around 35%. And that is one of the best digital banks. Right? So that's another metric, I would say, which can be tracked and which should be tracked. Apart from that, even if we consider digital banks or traditional banks, driver is digital sales. If we are doing all these gimmicks and digitization, etc., are we able to cross-sell, upsell, increase the digital sales percentage? So that would be another key metric. And the last one, but not the least one, I would say net promoter score, where you measure how many people from your customer base are actually promoting it or propagating it, or I would say recommending it to others, versus how many are distractors who are losing out or not recommending it. So that difference is net promoter score. I think all these parameters should do the trick.
Great, thank you. I know the time is up, but we started out a little late, so I think I'll take the liberty of going to my last but not the least speaker, Mahindra. You represent Unity Small Finance Bank, and so from the customer excellence perspective, can you tell me what you believe, or can you tell our audience what you believe are some of the transformative developments in the lending space, particularly from that perspective? And the second is, what is needed for digital lending to be more mass-based, democratized, to be more universal in appeal and adoption?
Right. Thank you, Nina. And I think these are two great questions. Since time is up, I'll keep it very, very short. I think...
No, please take your time. I'm just taking the liberty from the audience. I'm sorry, I'm taking the liberty from all of you to allow him to give a detailed answer because we are all customers at the end of the day of the banking services and therefore useful to understand his perspective. So carry on.
Thank you so much. I think there is transformation happening at multiple levels when we talk about inclusion, and considering I represent a small finance bank, the whole design itself is inclusion, where RBI wants small finance bank to serve underserved and unserved market, so to speak. I think the first thing that's happening within lending space or inclusion is ensuring, and a lot of credit goes to the current government in terms of the, the whole digital public infrastructure. I think that has helped banks and other technology service providers to really go ahead and deliver something which was not possible 10 years back. A very simple and powerful example is video KYC. Just imagine a traditional KYC where a customer has to have all the Xerox documents, and today a customer can be onboarded by a bank or any other financial institution in under 5 minutes. That's because of video KYC, the tech, and the Aadhaar. I think these two has really made are a shining example of what can be a mass transformation for 1.4 billion people in India, right? So I think that's one good example. From a perspective where we talk about transformation, and I think a lot of our fellow panelists talked about, today for a bank, it's a lot more easier to lend to a chaiwala simply because a bank can see 1,000 UPI credits happening every day, which was not possible earlier because that data was not available. So I think with UPI, with Aadhaar, and with associated technology, I think today banks are in much more better shape to lend to lot many those segment of the customers which was just not possible earlier. And I think this is just the beginning of a long curve in our opinion. I think more and more such things will happen within industry where some of the discussions in the boardroom few years back was, are fintechs gonna be taking over bank, or are bank gonna eat up fintechs? I think we are of the firm belief that both will coexist. We don't see it happening where fintechs will have no role to play, so to speak. I think both will coexist and complement each other. We strongly believe fintechs has a use case where they are very agile. They do things fast, and also they fail fast and they double down very fast compared to certain traditional organization within the banking space. So that's on the first part. I think second part, the second question, which was asked, which was more around how do we see, some of the things where it can make it more mass in terms of how can we make that happen. I think that transformation is already happening, in terms of lending. I think few days back or a week back, we looked at, we got the news of DigiPin, right? So these are the things which are happening at an India level, the India tech stack. And what we also see that banks have literally done huge investments within the technology, within their technology team. And when we talk about, I think every panel or every fireside chat, we will hear about AI and data. But I think the very fundamental of this is how does the data warehouse of each bank or each financial institution is there? What is the maturity level? We can get the sexy AI tool, but that tool will only work if you have the data right. If the data itself is not available in the right shape and form, no AI tool can really give you the ROI. So I think these are the few things I would say will help make the transformation more mass and make inclusion more and more possible in India.
Thank you so much. So I'll take a few minutes just to summarize. I've had the opportunity with the most experienced and enlightened set of panelists, all from their slightly varying areas of expertise and institutions, So I think broadly the takeaways that I have is that the financial technology has the ability to universalize or to extend its reach across masses, beyond classes, and to the deepest corners, given its nimbleness, given its agility, and given the shift it's able to bring about, also in the methods of credit. So one, of course, I'm going to digress a little bit and talk a second about the infrastructure, because unless the digital infrastructure is in place, all of these pieces will not fit in. And so what has happened in our country is that the government has provided that digital infrastructure, and we're able to plug in these little pieces there. And these pieces are not little, but they have a mammoth impact. The other piece I hear around the sort of group here is that the ability now to be able to extend credit or conduct payment without worrying about underwriting, traditional underwriting methods. That is very key, because now what we are using, or fintechs are using, is proxies. So instead of saying whether your salary is maybe the only credit underwriting method historically, or your assets, now we are moving to cash flows. But now, there is a certain further progression to say that, are you paying your bills on time? What is your credit card, payment cycle? And many other, what are you purchasing? So many proxies have emerged. And this nimbleness will extend credit beyond what it is now in terms of geography. The universal lending interface is the infrastructure. And I think with all of these mechanisms within it, it will allow for greater extensions beyond to the reach of a larger number of population. Data was talked about, data security is important, and I think one of the points that emerged was that this is not something that can happen overnight. Rules and regulations will come in, frameworks will come in, there'll be a cost to implementation to ensure data security. It is not to say that the technology does not look at vulnerabilities. Technology does not provide for vulnerabilities, it does. But if there are leakages beyond that, then this framework would assist, but it will call for some investment and will take time. Clearly, the digitization has also brought in this concept of hyperscalers. So everything is hyperscale. Your data centers are hyperscale, your operations are hyperscale, and therefore there's so much data that now mining that data or storing that data requires hyperscaler in every context. A payment space, I think we spoke a lot about, interoperability, we spoke about. The other piece is on the return on investment, and I think you made some good points, that there is no money that goes into any business which does not yield a return on investment, whether it yields it in the first 6 months, 1 year, 5 years, but it's got to yield some returns. And therefore, most organizations have started measuring this, including their investments in the digital journeys that they've invested in, or the AI investments they're making. And the first question people are asking, what is the return on investment? Because that is what the shareholders are asking. So those are some very pertinent points that came in. But above all, I think, what we're all hopeful of is this mass spread, inclusion, democratization, by whatever name you may call it. But nothing is very impactful if it's limited to a segment. Like payment, the power of the mobile banking, the power of mobile payments, that is the real power. And so thank you very much for being a very patient audience, and I've had the honor, and I thank every one of you once again for spending your time here, taking my questions. So thank you all. Thank you, panelists. Thank you.